4 out of 5 small business owners miss out on thousands each year because they misrecord loan fees in their books. That's right, not knowing how to enter business loan fees in QuickBooks Online can quietly erode your bottom line. So how can you make sure your numbers actually add up and you never lose another dollar to accounting mistakes? What exactly happens when you get a business loan and the bank takes out fees before the cash even hits your account? Should you record the full loan amount or just what ended up in your bank? And where do those pesky fees even go in QuickBooks Online so your reports make sense at tax time? Let's make this practical. Imagine your business lands a $100,000 0 cents loan, but only $95 0 cents shows up in your checking account because $5 0 cents was taken for loan fees. If you just record the deposit as income, you could be overstating revenue and setting yourself up for a tax mess. So, what's the right way? The simplest solution: record a bank deposit split into 3 lines. Assign $100,000 0 cents to your loan payable account, put negative $5 0 cents to a loan fees expense account, and if there's a security deposit, say negative $2 0 cents, send that to a security deposit asset account. This keeps your books accurate, your liabilities clear, and your expenses tracked, all without hiring a CPA for every transaction. But what if your bank statement just shows the net deposit? Don't let that fool you. Break down the deposit in QuickBooks Online so every fee is visible and every liability is accounted for. It's like making sure every ingredient is listed in a recipe, not just the finished dish. Why create a separate expense account for loan fees? Because the IRS and your accountant want to see exactly what you paid to get that loan. It's the difference between having a detailed receipt and a mystery charge on your credit card. One tells the full story, the other creates confusion. Still wondering if you need to set up a liability account first? Absolutely. In QuickBooks Online, start by creating a liability account for the loan's total balance. Then use that account every time you make a loan entry, whether for principal, interest, or fees. This way, your balance sheet always shows what you owe, right down to the penny. What about unconventional cases like prepaid loan fees or fees paid from your own funds before the loan deposit arrives? Record those as expenses right away, linked to your loan fee account so they don't vanish into bookkeeping limbo. Can you automate this process? Yes, QuickBooks Online lets you set up rules and templates so every time you record a loan, the system prompts you for all the right details. No more guesswork, just clean, consistent records. Still worried your transactions won't match up with your bank feed? QuickBooks lets you match deposits and fees, so your actual bank balance and your QuickBooks balance are always in sync. It's the digital equivalent of balancing your checkbook, but way faster and less stressful. If you have a security deposit withheld by the lender, create a current asset account and record the deposit there. This way, when you eventually get those funds back or apply them to your loan, you'll know exactly where they are. Missing even one step can throw off your reports, leading to missed deductions or a lopsided balance sheet. A few clicks now can save you hours and headaches down the road. Because keeping your loan fees and capital straight is only half the story. The next video reveals the critical differences between capital contributions and loans. Discover how misclassifying these can cost you big and why getting it right might mean more money in your pocket and fewer questions from the IRS.